Good morning, everyone. I want to take a moment first to introduce once again our good friend Keith Murphy with Essex Mortgage. And joining us today is our special guest, Tim Weidenkeller, who is with Farmers Insurance. And we're going to give you all of the ins and outs from these two experts about why insurance is such an important part of your home buying and home ownership experience. So we'll just get right to it. Good morning, Tim. Good morning, Keith.
Good morning.
Good morning.
So we kind of came up with a few Q&As that will help move this discussion along and make it probably the most germane to all of the questions that buyers have. But where I missed something, Tim and Keith just have full reign to jump right in and give their expertise. These are both seasoned professionals. They've been doing their work, their line of business. Keith as a mortgage lender for over 25 years. And Tim, what's your, how long have you been doing?
15 years in the insurance business.
Okay, great. Yeah. And what was your previous life?
I was I was director of sales and marketing for Pepsi-Cola for many years, and then national sales manager for another company. And after a number of years of traveling around the United States extensively, I decided it was time to not travel anymore. So I looked for an opportunity, and insurance seemed the right fit for me.
Yeah, good. Yeah, plant some roots, and here you are. Awesome. Well, we'll go ahead and jump right into the first question that I thought most buyers probably always ask me, which is, and they probably ask you as well, Keith, why is insurance necessary? Why is it required when they're getting a loan?
Yeah, certainly love to field that one. Insurance is a requirement, not an option when you're getting a loan, because we're lending you money on an asset, and that asset is the protection for the money that we're lending you. So we need to make sure that asset's insured. Nobody wants to have a fire, a flood, an earthquake impact the value of their home, but if it does, it's also impacting the liability or the loan. So there is no bank in America that's going to lend money for you to purchase a home without it being insured against a catastrophe of some sort. Now, if you were buying a home for cash, there's no, correct me if I'm wrong, Tim, but there's no state law that says you have to have that insurance protection, just like you do when you drive your car. You have to have insurance if you're going to be on the road. But when you buy a home cash, you don't have to have insurance. But how crazy would it be to buy a $500,000 asset and not have it protected against, catastrophic things that can happen as a homeowner?
Yeah,
I'll tell you, I've got an immediate knowledge of my friend whose brother owns a property right up there in Redding, right in the line of fire. Owned the property and acreage free and clear, and his house burnt to the ground, no insurance.
Oh man.
Yeah, quite the tragedy.
That's
Anytime I run into like older clients of mine too, I always find out, is your home owned free and clear? Yes. Is your insurance policy paid up? That's usually my next question. So,
where you do see it a lot is in when one spouse dies in the household, but that spouse that died took care of the insurance payments. So you may find that the other spouse has never worried about it, and then the insurance runs out and the house is uninsured. You find that many times in estate type situations. So that's a good question to ask the client when you meet them.
That said, how early on in the purchasing process do you recommend that the agent should be contacted? Keith, I'll have you maybe field that, and then Tim, you can jump right in behind him.
Yeah, well, as far as how my process works, when we do the initial buyer's consult prior to finding the home, I explain to them the importance of insurance, and I have, which Tim has helped me with, a formula in my spreadsheet. So when I put in the purchase price and loan amount, it automatically calculates an approximation of what the annual costs are going to be, just in a generalized way. So I explain what the importance is, how it protects them and the asset, and what the cost is going to be. But then when they find that home, you've negotiated, Kelly, a great offer, The seller accepts the offer, we open escrow. The moment escrow opens, we start going over numbers again, and that is one of the first things out of the gate that I get them to do for homework. One is to contact you to make sure they get their home inspection scheduled. Secondly, to sign their disclosure so we can order an appraisal. And while that's taking place, I say get on the phone and start interviewing insurance agents to find out who you're gonna, end up wanting to work with to get that home insurance quote. And within the first week, we want to have those quotes coming in, mainly so that we make sure that the annual premium, which is divided by 12 into a monthly cost, is going to fit into their debt to income ratios.
Right.
So we need to make sure that that cost is going to fit and make the loan work on the front end, not halfway through the process.
Exactly. So then, do you have something that you feel like you should add to that, Tim? I mean, as far as like how much advanced timing that you really need with at your firm to be able to get those quotes together for those?
So I have a little bit different take, and I will give you reality of what really happens, even though maybe the real estate agent and the loan officer says, hey, get your insurance squared away up front. Is there's so many moving parts in buying a home today that they wait to the very end. What happens at the very end is when they're a day from funding the loan and they don't have their insurance, or they have another insurance company that they've gone to, and all of a sudden, because of it's in a high fire risk area or there's been claims on the home, they won't do the insurance. So now everyone's in panic mode in the last few hours before they fund. So I would rather see people actually do it ahead of week one. I think it should be done on day one. The minute that the buyers say, let's go back and write up an offer on this house, I think that somebody in that group, the real estate agent, should be texting off an address and a name of someone to quote it. Because here's the reason today, is that if you happen to be in an area that may be potentially a high fire risk, and the high fire risk areas in California have moved from years past of 15% of the homes to 40% of the homes. So homes that were never in high fire risk are now. Now what happens is he's going to plug in a number, let's say $700 a year for insurance. Normally that's what that would be. Now, because it's in high fire risk, it may go up to $2,100. The difference between $700 and $2,100 may be the difference between qualifying for the loan and not qualifying for the loan. That's one point. That's why you want to do it up front, to get an accurate number. Secondly, when we run a quote, we can find out if there's been an insurance claim on the home. If there's been multiple claims, two things happen. It can be, even on one claim, it becomes very difficult to get insurance for it. Not impossible, but you need to have a little time to sort through that. Secondly, you do it early, because when your building inspector goes out to inspect the home, you can give him or her that information and say, hey, there was a water damage claim 2 years ago. Can you kind of keep an eye out for it? That's an important thing to have. Many times people find out at the very end and their inspector has already gone through the home. Or the people have moved out and they may never find out what happened. So that's the other. The third area is that you find out if it's in a high fire risk or it's in a flood zone area, right? So those are important factors that you need to know on day one to continue down the road. The other thing it gives you as a real estate agent is information on claims, because when the sellers don't disclose it, then you have information that you may need, and you can use it as you feel fit. So those are reasons I tell people day one or day 31. I think you should do on day one versus day 31, just because you find out vital information up front and no one's in panic mode at the very end.
Yes.
I'm going to piggyback on that.
I'm sorry, Keith, what were you going to say?
I was going to piggyback on that Tim is absolutely right. Even though we coach up prior to the home search, and then we coach up the day escrow is open, most clients are still thinking in a commodity sort of way, like, well, I need to shop around, and they get caught up on the internet looking around and talking to, quite frankly, too many people. And so one of the things that we've implemented in our process, and we tell our clients, this is our insurance guy. His name is Tim Weidenkiller. Here's why we recommend using Tim, and we're going to go ahead and get you a quote right out of the gate. So that's one of the things that my co-pilot and assistant Saudi does. As soon as we get a contract, we're shooting over a request for quote from Tim, so that we can unmask and uncover all those things that he just talked about, which could potentially kill a deal. And you, like Tim said, you don't want to find that out at the end of the process. You want to know that right out of the gate.
Well, what I started doing is when I take a listing, I'm shooting that address over to Tim and I'm getting a quote so that I can upload that into the supplements in the MLS. And as he said, you know, if I've already gone through the disclosures with the seller and they have not revealed that there was any claims, and sometimes, you know, people just honestly, they forget. If it's that, you know, 5 year, because they have to disclose within anything within the last 5 years, and, you know, they're like, I don't know, was that 5 years ago? Maybe it was 6 years ago. I think it was 6 years ago. So, you know, no, I'm not going to disclose it. And then he can go ahead and he can run that for me. Not only that, but I'm able to upload that into the supplements to be able to say, look, we've already done some homework. We know this property is insurable. That is part of the buyer's normal due diligence, is to make sure the property is insurable, but we've already covered that for them. So we have found an insurance policy that can be written, at least as far as, you know, we know as of the date that, you know, he made that quote out, you know, barring any unforeseen, you know, circumstances. So I wanted to mention something too about what you had talked about on the fire hazard zones. You know, California, as you said, so much has happened here, and in the past 2 years. In my particular normal primary market area, which is Temescal Valley, we're just over the hill from where Keith is, and out here in Riverside County. So the Holy Fire greatly impacted our area, but primarily to the south of us. Nevertheless, I'm sure the insurance companies and the insurance commissioner says, well, you know, we need to look at the expanded area, because now there's no brush to burn in that area. The fires could spread rapidly to those higher brush areas that didn't get burned before.
Yeah.
So we
move from 15% of the homes to 40%. That's a huge increase in homes that are now in some sort of high-risk fire zone. And there's different moderations of that, but homes that were not considered in high fire risk are now in high fire risk. So people need to know that on the very first day, because it's going to impact them from, at least from a financial standpoint.
Right.
And not that they're not going to want to buy there, because let's face it, these places are beautiful, right? That you're out in more wilderness, they're great places to buy. You know, if you live by the coast, you have to get flood insurance. If you live in the mountains, you get a more expensive fire insurance. But I think it's just the expectation of finding out on day one versus at the end.
Yes, exactly. So is there anything that you can tell us about how premiums are set, Tim? I mean, I'm sure you have to not only look back to see if there were any claims, but I think on one of the recent claims, or not claims, but the quote that you just sent me, you had been able to run like a cost to rebuild calculation. So is that just an algorithm or a program that you have within?
Yeah, so we are required to run a computer program on the cost to rebuild. It's an industry program. We put in the characteristics of the house, you know, square footage, number of bathrooms, flooring, everything. And fortunately today we can look a lot of that up online, down to the color of the flooring, you know, if we need to. So we put all that information. It comes up with a model that says, on this date, in this zip code, this is the cost to rebuild. Now, that can change slightly. Northern California right now, because of all the fires, the cost to rebuild is a little bit higher than it is down here in Southern California. And so that's what we put in. Now, it's so important that the lender will require that document, the computer printout, in order to fund the loan. They don't look at the appraisal number, because the appraisal number is not really a function to rebuild the home. It's a function of, you know, making sure the loan is the right, you know, amount of money. So that's what they ask from us. So that's the most important thing. Now, the thing about what kind of drives the price is really the size of the home is probably the number one factor. Now, you could take two homes in two different areas. You know, one is an 1,100 square foot home and one is a 4,000 square foot home, and they may cost the same depending on what area you're in. Now, sometimes people will question me like, why is the insurance on this house so high when it's only a $400,000 or $500,000 loan? Because they may be used to writing that $400,000 or $100,000 loan in an area with 1,100 square foot house, but this is a 4,000 square foot house. Now the insurance costs are high, so it really has to do with the size of the home, and some other factors, or they call it protection class, where if you're in a highly densely populated area, there's more risk involved. If you're in a high fire risk, there's more risk involved. And so there's some other factors, but the main driving factor is the size of the house.
Got it. And then I think we had talked about maybe how does a deductible fit in? Like if is there a deductible, a minimum deductible requirement? Does the borrower just get to choose? And I know that the higher deductible you have, generally speaking, the lower your insurance premium can be, but sometimes it's a negligible amount to go from $1,000 deductible to a $2,000 deductible.
Right.
So where does that fit in?
So if you go back historically, when homes cost $20,000 to build versus $300,000 and $400,000 and $500,000 to build today, the deductibles were around $250, maybe $500. So historically, they were anywhere from 0.5% to 1% of the cost to rebuild. Today, the cost of some of the homes are so much to rebuild that 1% could be a staggering number, $4,000 or $5,000. So we try to keep it in their arena, depending on the size of the home, and also there's people that can have a lot of money, so it's not as important, and some people want a higher deductible. But we try to keep it to an amount that is going to, over the long period of the insurance policy, is going to save them a lot of money. Because if you run that deductible low and you don't have a claim for 20 years, you've probably thrown away $10,000 in premium. Now, if you have a higher deductible and you've gone 10 years, you just put a lot of money in your pocket. Now, having said that, when you file a claim, then that first $2,000 is out of your pocket. But in today's claim environment in the insurance industry, getting a claim on your home is like getting a ticket on your driving record. And a water damage claim is probably close to getting a DUI on your driving record. So you want to be careful when you file a claim and understand what's involved. And quite frankly, if it's under the deductible, you probably wouldn't want to file it even if you could, right? So because you just want to pick and choose. Now, if you come home one evening after work and there's been water running upstairs all day long and the ceilings are bowed, guess what? You're filing a claim. Doesn't matter what it is. But sometimes there are things that happen in the home that seem extreme, but actually don't cost a lot of money. So it makes no sense to file a claim. So a deductible is two things. It keeps the price low, but it also keeps people a little bit honest to maybe not trying to file a claim when they shouldn't. And so it's that. But at the end of the day, what I've learned is that it doesn't matter what we can all sit here and justify might be the best deductible. If the person doesn't feel comfortable with the deductible, we need to do whatever that person, whatever makes them feel comfortable and allows them to sleep at night. And if that's a low deductible and higher price, then that's the way it is. So.
Okay, good. Is there any minimum deductible that the loan requirement, or that the lender requires, Keith?
I'm going to defer to Tim because honestly, when it comes to the deductible, I don't think that is of concern. I've never seen an underwriting condition come back and say your deductible is too low or your deductible is too high. But the replacement cost estimator, which Tim spoke about, and making sure that the coverage amount is going to be enough to rebuild should there be a catastrophe is generally what we're looking at.
Oh, okay. I thought that I had a requirement on that when I bought my first condo FHA, but that was years and years ago. So,
so there is a maximum requirement. It's 3%. So what happens sometimes on condominiums, because it's just inside the walls coverage on many of them, that you don't need as much coverage as you would a freestanding home. So you can hit that 3% easier than if you had a home. A home is very difficult to hit the 3% mark because that's such a high deductible, $12,000, $15,000 deductible. But in a condominium with inside the walls coverage might be $40,000, $45,000. It's not difficult to hit that deductible. So it's normally 3% with most lenders. There is no minimum. You can have whatever the lowest amount is. Again, you're going to pay a lot of money for that low deductible, but you can go as low as you want.
Okay. You kind of touched on bringing it up, Tim, which was flood insurance. Now, I know a lot of people don't realize that every property is in a specified flood hazard area. It's just a matter of how frequently that property is subject to flooding, and that is something that's going to be researched, and a report is going to be obtained by the lender. And if the property is in a flood hazard area that requires insurance, that's something that, again, Tim, you're going to be able to find that out when you run that initial quote for me, like when I do the listing.
Yeah, flood areas are, most people think, down on coastal communities. But if you go along the foothills, at the base of the foothill, you can go on Google Earth and look down and you see a wash that will come out from the foothills out onto the flatlands. And somebody decides to build a tract of homes there, right? And you can see that at one point in time, the wash would go through there. There are a lot of communities up at the bottom of the foothills that are in flood zones. Avalon and Catalina is in a flood zone. And it's not because they're on the ocean, it's because the water coming down from the hills there. So anytime you're at the base of hills, you may be in a flood zone. There's a place right off the Harbor Freeway in LA that it's in a flood zone because it's a low level area. So just because you're not by the coastal community doesn't mean you're not going to be in a flood zone. Up north of Marietta, there's a dam. And if you're below that dam, guess what? You're in the D flood zone. And I laugh because I always say it's for dam flood zone. But so you just don't know. And we can run a flood determination in about 30 seconds and determine the same one that the lenders run, but we can do it on day one and determine if that's an area. So if you're ever at the base of a foothill with a client, it's probably good to check if it's in a flood zone.
Right. Okay, good. And then Keith, as far as you're concerned with the loan, much the same type of thing. Again, the lender is lending on that big asset. So if it's in a flood zone, that is at a certain level or higher, like I think it's what, A, B, and D are the ones that are required.
Yeah, there's I think a few more than that, but the distinction is there's mandatory flood zone, meaning the lender will require, and then there's non-mandatory, there's preferred. So those are kind of the two breakouts. And depending on where you're at, and there's a map, you can go to the FEMA website and physically look at the Google map with the blue overlay.
Oh, okay. And
sometimes it looks like a big blob thrown down on the map, where it's not by street, it's kind of a circular, movement where the flood zone is. And that's easy to do. Anyone can go to the FEMA flood zone and look at the map and try and understand, where it's at. If it touches the building, then the whole house is in a flood zone. If it doesn't touch, if you have a detached garage and that touches, but your home doesn't, then there may be some issues there. Even that, you might have to get a flood policy to cover that. So it just depends. And most of the time along river channels that run from the mountains down to the ocean, if you're back up to those, usually 10 feet in, so if your house sits close enough to it, it may be in a flood zone. But so you're either in the mandatory or you're not. Most are not, but there are areas that would probably surprise people. But it's actually, and anyone could call me if they want to learn how to go to the FEMA map and look it up, because it's kind of interesting. So.
Well, just a little bit of an anecdotal evidence of both fire and flood was when we had the Holy Fire a couple of years ago, August 6th, 2018. I'll never forget it. A day that shall live on in my memory forever when that started. And I saw those first puffs of smoke coming up over the top of Santiago Peak. As a result of that fire, we had the following year in January and February, some of the heaviest rainfall that we had had in a long time. And unfortunately, those several 100-year-old oak trees got burnt to the ground. And so their root structure was no longer absorbing water as all that heavy rain came up and all of the brush and that sort of thing. And we have a mobile home park to the south of us that was right in the line of that fire and did end up getting evacuated. None of the structures got burned in the fire, but because they were right behind where the fire had been, lo and behold, here comes the rain, and there's a flood control channel that comes right through their property, or just to the south of that property and partway through the property. And it just got inundated with water and debris and animals. And so now I'm sure whereas it might not have been considered flood or their flood hazard rating probably got jacked up because of the fire. So
Yeah.
two kind of go hand in hand.
It does cause the map changes. The FEMA flood map changes because things change. Homes are built, areas are changed, the flood channels are put in, and some areas go back into a flood zone after not being. So it's constantly changing. And today, maybe not. Tomorrow, maybe. So
Right.
it's always good to find out.
Right, good. So I think one of the key points to take from this is get a hold of your insurance agent quickly. If you don't have a good insurance agent, call me or call Keith and let's get you in touch with Kim Weidenkeller. And if you're looking at any property to purchase, early on in the game, early is so much better than last minute. I know we've had, just to pump up Tim, he's just been a lifesaver for me on a couple of different occasions where on my listings, the buyer had an agent that at the last minute, like Tim was saying, could not underwrite the policy. I was able to call him and praise God, he jumped right on it. And within 20 minutes to half an hour, we had that policy and we were able to go ahead and fund and record and get the transaction closed that same day. So you've been a lifesaver for me on multiple occasions, Tim, and I just want to thank you for that. And I know that the clients have been super happy and you know, just being able to buy their home, the last thing they need is that big hurdle at the very end. And you know, it makes you feel sick to your stomach. And then when somebody can, you know, come to the rescue, it's like you've got hero written all over your chest. So I want to thank you so much for that. And
It is heartbreaking at the end of an escrow when something happens from an insurance standpoint and they can't buy the home now because of the qualification and the expenses go up. And after emotionally investing 30 days and that's your home, and then all of a sudden it's no longer your home, and all this could have been resolved on day one. And that's really what I look at. It's heartbreaking to anyone involved in the process, from escrow to the lender, to the real estate agent, and even on it's hard, you know. And so to hear people that fell in love with this home and then at the very end, it doesn't work out. So it's always important before you get too emotionally invested and put too much, sweat and blood and tears into it to determine if this is going to work out right up front. And I hate to say it, but insurance can kill deals if it's not looked at up front. And so it's all, that's just, I see too much heartache. So I think if everyone does it up front, they're never going to run into a bad situation.
yeah, I agree. And then Keith, rounding out our recapping today, can you mention who orders the policy at the closing? I mean, I know that the policy, we have the quote already and you know the numbers that you're going to work with, but when it's going to actually go into effect, is that mostly based on when the loan is going to fund? Are you coordinating that with escrow?
Yeah, exactly.
I know what my experience has been, but I'd like to hear it from the lender perspective, the expert side there.
Sure. So 100% of the time it's the same. The client chooses the insurance agent and we have a written quote that goes to underwriting, loans approved, and then docs are drawn. But when the actual insurance effective date is coordinated with the insurance company, that's done through escrow. So the escrow officer is calling Tim's office, updating the policy quote to make sure that, the effective date is of the day of funding, that the loss payee clause, which protects us, we're named as, policyholder as well in the event of loss, that the loss payee clause is correct. And then, the loan funds, and then out of the proceeds of that loan, money is wired to Tim's office to cover that policy for a period of 12 months, a 1-year binder.
Right. Okay, great.
And I want to add a little something to what you guys are just talking about.
Yes.
And I see this a lot, and I probably would be the same if I was a client and I needed to get insurance on a home. I've never owned a home before. My first thought, I think, would be, well, let me shop around and see who has the lowest cost insurance, because that's what matters, right? Is the cost. And from my perspective, and being in the industry for so long, that is absolutely not the most important factor. That's kind of like treating your insurance policy like jumper cables. They go in the back seat under the front seat, whatever, and you only pull them out if the battery's dead. Well, that's the same with insurance. You're only going to utilize the policy in the event of, loss. And at that point in time, which you hope doesn't happen, that is when it's not the insurance policy or the insurance company, it's the insurance agent that becomes so important. And I can't tell you how many times clients have had issues, and instead of going with a big carrier and getting sucked into a call center where nobody's looking out for their best interests, and they end up, insurance companies are there to make money, right? So they may not be giving them the best guidance from that call center, but one of the key points here, and it should be a key takeaway, is you need to have a good relationship with your insurance agent. And Tim is the most astute, knowledgeable, and straight shooting insurance agent I've ever met in my entire 25 plus year career. And that is invaluable when there is a claim, because he can help you save thousands of dollars and make sure that whatever was the issue is done the right way and not done in a cost saving sort of manner. So
I'll add one more thing, is that just because someone gets a quote from an insurance company up front doesn't mean there's not going to be issues on the back end. There are some carriers out there that will quote you, but not tell you there's a claim, and not tell you it's in high fire, and not tell you they're not going to bind the policy. They will let you sit with that quote for 30 days. Then when escrow requests evidence of insurance, they will say, now they should be requesting this probably a week in advance, but in the real world, maybe 2 days in advance. And all of a sudden, 2 days before, they find out this person, this carrier that they've had the quote with for 30 days will not do it. And for me, I get a lot of business that way. So it's, we take care of it, but it's just one of those things that you have to make sure that it will be, if there's a claim on it, if there's the high fire, so someone is going to point that out on day one. Yes. And that's what we do. We spend a lot of time, because I just don't want to have anyone, fall out at the end. But just buyer beware on that point, that it happens. Sit on a quote for 30 days, no one's telling you they won't insure it.
Yes. Gentlemen, thank you both so much. This has been so informative and insightful. And I know that whoever is watching this is just going to learn a ton of information, probably come back with more questions. So I just want to invite you, if you have more questions, please pick up the phone, call Tim Weidenkeller with Farmers Insurance, pick up the phone, call Keith Murphy with Essex Mortgage, or pick up the phone and call me. I'm happy to always be able to be a conduit to answer all, or submit all those questions to the right people. And thank you guys both so much for your time and your expertise and your knowledge. I know it comes from a genuine place of really caring about providing service to the client. And that's what is so important, to make sure that people understand there's transparency with what we do. It's not free to pay for your insurance, but it is free to get information. And this is great information. I so appreciate you both taking time for us this morning.